Hello and welcome to Fundamental Value, a journey to quantify crypto. I'm your host, Joshua Frank, co-founder and CEO of The Tie. On Fundamental Value, we speak with the leading hedge funds, analysts, trading venues, and digital asset market participants. Our goal is simple: to understand how the leading minds in the cryptocurrency space are researching, analyzing, and quantifying the value of digital assets. Remember that you can catch this episode and other deep explorations of blockchain trends on Cointelegraph magazine at www.cointelegraph.com. Very quick disclaimer, nothing we say here is investment advice. You can view our show notes for our complete disclosures. I'm very excited to be joined today by Marc Weinstein, head of platform at Mechanism Capital. Marc, it's great to have you on.
Thanks for having me, Josh.
And so, I know you laughed when I put this in the in the Google Doc of the questions, and I know you're like, really, but you are known for playing a little bit of a role in Fire Festival, being the good guy in the story. But I'd love if you could give us like a very, very quick overview of your involvement in Fire Festival, because I think no story with you is complete without that. And just for anybody listening, you can listen to Marc did an entire 2.5-hour podcast on what Bitcoin did to talk about the topic. So if you're interested and you think it's more interesting than what we're going to talk about, hop over there and then hopefully you come back after. But yeah, why don't you give us the little rundown?
I remember Peter going on Peter's podcast and basically being like, so we're going to talk about crypto, right? And he's like, yeah, but we're going to talk about Fire like predominantly because that's all anybody really cares about. No offense. I was like, all right, cool. Well, let me get a little bit of a crypto plug here. So yeah, I mean, Fire Festival is interesting. It's now been 4 years since I kind of signed up to be an advisor to that festival. My friend who works at a venture fund, not to be named, was looking at investing in Fire app, which was this kind of talent booking app. And I was in the process of selling my second company, which was called 90s Fest, which was a music festival business and digital marketing firm, to this company called Scopely. And he was like, hey, man, this is an interesting company. They're launching their product with this massive festival. You've experienced producing festivals. I think that it would be cool for you to, advise them, to help them out. So I flew down to the island, and the rest is kind of history. But it was definitely a wild experience.
And so I won't make you go into any more detail, but definitely check out Peter's episode, or even the I'm sure many of you have seen Marc in the movie already. So let's remove Fire Festival from the equation. We got the elephant out of the room, and so let's dive in. And so, can you talk to us about your life, pre-crypto? Right, you started in traditional finance, and entered into the music industry and a few different things. So I'd love to kind of hear your background before you found crypto.
Yeah, absolutely. So I'll try to make a long story, and it's getting longer. 13 years since I graduated college now. It's insane. But I studied finance undergraduate at Wharton, was really passionate and interested in macroeconomics. Came up in 2008, my junior year, the financial crisis hit. A lot of my friends lost their jobs working at Lehman and Bear Stearns, and other firms. OCR, on-campus recruiting, as it's called at Penn, just slowed down as most of the companies were not hiring. And what was funny to me was that like none of my professors had predicted that any of this would happen. And these are kind of the top finance professors in the world. And then after the fact, I think even few still could really explain what had gone down. I did an independent study on financial crises my senior year, and kind of got hooked by the Austrian economists. So Mises, read Human Action, Hayek, and the ideas that they put forth kind of made sense to me, and started thinking a lot about quantitative easing and hard money policy versus kind of this nebulous central bank dictated fiat system that we had, and was a little bit concerned that we were going to experience inflation. So I graduated that year and ended up working in investment banking. I worked in Jefferies on their M&A team. And then I worked at Morgan Stanley on their financial sponsors team. We provided kind of debt and equity financing to the Blackstones and KKRs of the world. And I actually received a job offer from a private equity fund in San Francisco called Thoma Bravo, which at the time was, I think, like $1 billion fund. Now they're like 15 billion. And I think a friend of mine recently told me that I was the only person to ever turn down an offer from Thoma Bravo. So I guess, take that for for what it's worth, because that's been something that, you always look back and play like, what if I had done this? And for some time I was like, man, what if I had actually just taken that job instead of trying to build something? And now it's kind of like a fun little claim to fame that I have for myself. But basically turned down this job offer because I wanted to build. I wanted to be an entrepreneur. I wanted to build companies and take that shot. And as someone that was really fascinated by all of the money printing that was happening, I wanted to create a product that would protect investors against the inflationary impact of quantitative easing. And this was now like 2013. Bill Gross was at PIMCO kind of talking about inflation. He was the CEO over there. And inflation, at least in the CPI, never happened. I was 23, my partner was 24. We were selling CPI plus asset-backed loans that were issued by companies whose inventories actually made up the CPI index. So think like canned foods and toilet paper and other consumer durables. And the idea was to create a private market alternative to inflation-linked securities issued by governments, or TIPS. We called the product KIPS, Corporate Inflation Protected Securities. And so there I was, 23, partner 24, selling inflation protection and low interest and safety with zero track record to institutions when no inflation was coming. And obviously decided to throw in the towel on that after about a year and a half of hard selling. And it was at this time, actually, between that and my next startup company, which was called 90s Fest, that I was reintroduced to Bitcoin. So I read the Bitcoin white paper in 2011 when I was at Jefferies, thought it was interesting, kind of brushed it off as kitschy. And then I read it again in 2013, and the idea of a non-sovereign digital store of value really resonated with me. And so I took what little savings I had left after being a failed startup entrepreneur and invested in Bitcoin. And the price doubled. And then the price collapsed 70% because of Mt. Gox. And I was like, okay, this is either going to be a zero or like a 10,000x. And, really kind of anchoring the market cap of Bitcoin to the gold market cap. And I think today, I guess it was the CEO of Goldman Sachs said that he thinks that Bitcoin should trade like gold or should have an equivalent market cap at some point. So that's pretty big news. And that's when I started my second company in the music industry. And I said this was going to be a long story short. So I'll fast forward through that piece of it. I basically was tired of kind of highfalutin financial ideas, wanted to build as an entrepreneur something practical, something tangible, where I can see firsthand the users and the consumers or the attendees, in my case, participating, and something that was maybe a little bit smaller in scale, but that I could sell to a larger company like a Live Nation or something. And that experience started because I was paying the bills as essentially a small business investment banker for companies that were raising capital. And one of the companies I raised for was called Prime Social Group. They're still one of the largest independent festival promoters in the country. And I just found the business to be super, super interesting and fun. It was actually at Fire, believe it or not, in 2017 that I learned about Ethereum. One of the producers there had invested. In January 2017, my Bitcoin investment was profitable for the first time in a number of years. And I realized that something was happening in this space that was much bigger than Bitcoin. And I intended to learn as much as I possibly could. So after Fire, I took some Bitcoin and I invested in Ethereum. And then I got swept up into the 2017 ICO mania in Los Angeles. I actually worked at a company as a consultant called DNA that was, really involved in a number of ICOs in 2017. I remember sitting in my first pitch day. There were like 7 projects that pitched us, and just was so blown away. Like I was quiet. This was like at this time it was blockchain
I'm
for
actually
everything.
curious. What were? Do you remember any of the projects that pitched you, or any still around?
Yes. So Compound came in and pitched in February 2018. I think they had actually finished their private sale at that time. I don't think they were doing a money market. It was something quite different, if I remember correctly. Calvin came and pitched. I remember having a long conversation with him afterwards because I basically couldn't shake the idea that DeFi was just rebuild, and it wasn't DeFi at the time, but that this was just going to rebuild a lot of the issues that we faced in the previous financial crisis. And I think I missed a lot of DeFi because this was my take. was that financial contagion through all of the layers of leverage is going to lead to some kind of blow up, and it still might. And Santiago from Parify often talks about how, well, at least everything's on chain and it's transparent. And I agree with that. However, I think that there's very few individuals and enterprises who can currently evaluate the complexity of the layered, the benefit of DeFi, which is composability, but the layers of leverage and protocol risk and counterparty risk with smart contract to smart contract lending that's happening, even though it's transparent and on chain. I think very few people can really understand it or predict if there is some kind of unwinding. And we see the impact of like DAI breaking its peg in a dramatic way and compound users getting liquidated massively. So still a lot of risk there. But anyways, that's a big aside. And if you listen to my podcast with Roy Lerner, who I worked with at Wave Financial, and Jason Choi, Block Crunch, in like January of 2019, we talked about DeFi, and I was basically like the DeFi bear, and Roy was the DeFi bull, and we were talking a lot about this. And of course, on the way towards some kind of black swan event in DeFi, there's a lot of value to be created, and I clearly wasn't really thinking about that.
I was at an event in late 2018, I think. It was a crypto briefing DeFi event, and at that time, Andre was actually at crypto briefing still, I believe. And Maker was there. A bunch of these early DeFi projects were there, and I just wanted to network. Like I just didn't even listen. I was so dismissive. I just didn't get it. It's that was an
Yeah.
1000x I'll never get back.
Yeah. Oh my God. We could talk about misses. I mean, we have to talk about that because I've got so many under my belt. I think you can't be in this space for a couple of years without having a story or two about the one that got away. Some others that came to pitch, Video Coin was another one that came to pitch, Hypernet, Switch, which was building renewable energy credits on the blockchain, which I actually think is still a pretty damn good idea. There's a company called Nori that raised from Paradigm that is working on building a new type of carbon credit that's verifiable on the blockchain. So, a lot of ideas are just a little bit ahead of their time. And a lot of these projects suffered from kind of the token velocity issue, right? Which was they were all payment tokens and there was no reason to hold them. And then later on, after I joined Wave, so I left DNA. DNA kind of had this little split where half of the team went to Wave Financial, half of the team ended up at Casper Labs, who just did their coin list offering. And I ended up at Wave and led venture there for our venture team. We were building structured products and doing a lot of other funds, but we had a small venture fund, which has gotten larger since. And I worked with this gentleman named Dave Seamer and Les Borsai, who are the partners over there, and just had an incredible team around me. I mean, we were talking about some of the names like Avi Feldman, who you had on this show before. He's now running trading at Block Tower. Roy Lerner ended up at Framework in the Framework Labs team. Tom Lombardi at 3IQ. Just some exceptional people, and shout out to Ben Tsai, who's still at Wave. He's extremely bright, ex Morgan Stanley, asset management, structured products, just knows the stuff cold. So that was a fun experience. But when I got to Wave, it was like, this generalized mining thing started to become a trend. And I remember Jake Bruckman speaking about it on Twitter. And that was my first interaction with Jake, started going back and forth on it. Now there was this concept of velocity sinks where, maybe what can you do to make to make people want to hold a token? And people were going through all these mental gymnastics in 2017 and 2018 to try to create utility for the token. And then generalized mining came along, for tokens like LivePeer, and then Tezos baking. And then, of course, I think this DeFi wave kind of blew up. I think Compound and Synthetics really nailing the incentivization of people using their protocols through what later became yield farming and other things. But it's been fascinating to watch the evolution over the years.
And so, speaking of your experience at Wave, you were on that early stage team that invested in, a number of projects, but two, home runs. I'll speak on your behalf, which was you guys were very early in Near, and you were very early in Scale. along with other projects. And so I'm curious, what did your due diligence process look like, at Wave, and what made you decide to allocate to a particular project? And, how does that differ from what you're doing today?
Yeah, I mean, I think in the case of near and scale, we were building the thesis. Well, with scale in particular, we were building the thesis that layer twos on Ethereum were super important. We're going to become a thing. Technically determining at that time whether it would be optimistic or ZK rollups, I think was, very early and challenging. I still think that people believe that ZKs are the better technical solution, but are, challenged in a number of ways. Particularly, they're not able to you're not able to do smart contracts on ZK rollups as yet. And surprisingly to many, I think ZK EVM from Matter Labs is supposed to launch in a couple of months, which would put them ahead of Optimism as far as layer two, layer two compatible EVM, EVM compatible layer two. And so, with scale, it was, we had this thesis, we met the team, and Jack was the type of founder that you just wanted to back. He put an incredible team around him. He was someone that executed extremely well. He understood kind of how to play both the crypto market dynamics as well as the technical side of things, and build a working product, which I think, a lot of crypto, you can kind of fall into like the bucket of hyper academic, but not really diligent in terms of like delivering on product deadlines, and shipping. And then the other side of it is, on the other extreme, is kind of just like vaporware. And I think Jack had the kind of tenacity to build and execute. So that was really the process at the time. It was like, build a thesis and then look for the best teams that were developing in each space. And of course, like, Ethereum scaling, still an issue today. 2 years later, the Near protocol team were another case of an exceptional team that just shipped. And they've been, working extremely hard. They just launched, I think, the Rainbow Bridge to Ethereum. And we felt that at a $30 million valuation, I think it was at that time, there was just a ton of upside.
And so, I was going to wait for this later, but you already got into, this layer one conversation, right? The near Ethereum and the need for, layer two on Ethereum. And so, I'm curious, your thoughts on layer ones broadly. I mean, would love to dive into, near, but, also talk about, some of the other layer ones that are, coming out, whether it be Polkadot really rolling out, or, Solana, which is gaining traction, Binance Smart Chain, Avalanche, Tezos, you name it. Do you think this is a winner take all race? Do you think Ethereum has lost, some ground? I mean, what is where do you currently stand, as it relates to layer ones? And, yeah, I mean, just love to get your thoughts there broadly.
I think you're seeing the success of competing layer ones. Well, in terms of use, right? Like, Binance Smart Chain is probably leading the charge as far as layer one competition from actual users, and volume goes. I think Solana is still early, but they're starting to build traction. I think, obviously Polkadot, we're waiting for kind of parachain auctions, and I think that's going to set off a whole wave of new possibilities, and certainly new financial opportunities for investors as these parachain auctions take off. I think that the reason why these layer ones are EVM compatible is to make it easy to port over kind of liquidity and users from Ethereum, which to me makes each of these layer ones in a way like an Ethereum sidechain with a particular use case, right? Like, Binance Smart Chain is faster, but it's not as secure. I mean, nobody could argue that it has anywhere near the security of Ethereum, and many builders in the DeFi space on Ethereum would probably argue that it's decentralization theater. That there's a lot of key man risk with CZ, even though there's as many nodes on running on Binance Smart Chain as there are on some of these other kind of like more hyped up, layer ones and layer twos. I think we will live in a world where there's going to be potentially app specific layer ones. Like Flow is another example of one that has traction with NBA Top Shots. Clearly they wanted to build something that was very specific for the users that they wanted to onboard into their
You know,
ecosystem.
it's interesting that you say that because like that's the way a lot of stuff was built originally, right? And it seems like we moved away from that with Ethereum. And it's funny to see, with your example with Flow, that coming back a bit. So that's an interesting take.
Yeah, I mean, I think we might see layer ones that are just app specific, and they'll all be interoperable, right? Like we have bridges that are connecting to Ethereum. I just today used the Matic bridge. It was seamless. It was as painless as just doing any other transaction using my MetaMask wallet. And then I was farming stablecoins on Aave on Matic, and that experience just feels, like when you start to use these products, I think that's when it gets even more exciting. It's just like I don't think you can be in this space if you're not using these things on a daily basis.
It's funny, we chatted before and you're like, "Oh yeah, I'm not really the DeFi guy. I don't really want to go into DeFi." And then you're talking about, farming on Matic. I can't imagine there are many people who have fallen down that rabbit hole yet.
Yeah, I
I
mean,
haven't
I'm a
tried Matic
user.
yet, so
I'm a user, I'm a user of these protocols, but like there's just so many galaxy brains. Like even on my team, right? Between Daryl, Andrew, and Ben, and now Eva, like it's just like wow, every day I'm blown away by the intelligence in this space. And so, for a show like yours, when your audience are super knowledgeable, for me it's just I think they're going to want to go a layer deeper, and that's all I was saying. But yeah, I mean, I love using these things. I think it's super interesting. I think that being your own bank is very, very cool. It's also very scary. Like, have you ever lost a private key?
I have not lost a private key. I've been rug pulled about 100 times, but I have not lost a private key.
Where did you ape into some of Andre's projects?
I've aped into so many things. My favorite thing, and I do not recommend this to anybody listening, I recommend you look at this. But if you go on bscscan.com, which is owned by the Etherscan folks, they're not really upkeeping it, but under resources, there's a thing called yield farms list. And it's all the garbage yield farms on Binance Smart Chain. And so I'm going down the list now. Dumpling Swap, you know, Poyo Finance, Juicy Peach Swap, Mooncake Swap, Gecko Swap, Yield
Dude,
Bay Finance.
mooncake. Oh my goodness. Oh,
I may or may not have been in some of these things previously listed,
I think I
but
tried to do the BAS clone. It was like a clone of a clone of a clone of an algo stable. I think it was called Soup Dumpling on Binance Smart Chain. I
my
was like,
favorite thing is that everything on Binance Smart Chain is a pancake swap, like fork,
clone.
every single
Yeah.
thing.
Yeah. And now, I mean, it's what's super interesting is like, okay, right. You talk about the importance of infrastructure being built on these layer ones. And that's why I don't think, yeah, maybe Ethereum's losing market share in terms of like where dollars are flowing for investment. But the infrastructure is just still so much better on Ethereum. And like something as simple as, querying data on Binance Smart Chain is just so hard because the existing solutions that are out there aren't able to keep up with the volume and the rate of data that's streaming essentially from this chain. And so, companies like Covalent, who we invested in, are trying to solve these problems for a multi-chain world where you're going to need data availability for a lot of different activities that you do across all of these networks.
Yeah, no, for sure. And
So
I think, I guess a question that I have, as it relates to all of these, different networks as well is how much does the actual blockchain itself matter and the technological capabilities of the blockchain, whether that be speed or transaction cost or decentralization or data access or anything else matter versus community versus the applications that are actually being built on top of them. Because I don't think anybody can argue that Ethereum has by far the best applications built on top of it. It's got by far the biggest community. It's got by far the best developers and the most developers. But it's a lot cheaper to use Binance Smart Chain. It's a lot faster. If you're just trying to trade, it's a better experience. And so I'm curious, your thoughts in the long run. I guess when you said everything will be an Ethereum smart chain, I mean, I guess that's your kind of take. But if you have anything else to add.
Yeah, I mean, everything basically, I think that a lot of these will anchor back to the security of Ethereum. And that's super important. As far as like what's the most important element, like, the reason why Binance Smart Chain is taking off is because they are just a marketing machine to retail investors, specifically in emerging markets, who can't afford to pay $60 to $100 on a transaction for gas, right? Like it's boxed so many users off of out of DeFi because it's just way too expensive for them. And so Binance can market that to just this mass of retail users, and they do have real volume. We've done the work. We invested in PancakeSwap. Like, we did the work up front because a lot of really intelligent people were just like, "There's no way that volume's real. There's no way it's real. There's no way the users are real." And just every day we continue to see that the activity on Binance Smart Chain is real.
No, I mean
Um,
it's great. Like I use it to access garbage because the yields are insane, and I'm also like full transparency. I have a decent Pancake Swap position, and like the cake pool on Pancake Swap has yielded so much money. It's ridiculous because I mean you were like I
Profit
was
Maxi.
what'd you say? Sorry.
You're a profit Maxi.
Yeah, yeah. I mean, look, I mean, you could still get 100% APR on Cake, and because there's effectively no transactional fees on Binance Smart Chain, right? If you're compounding that, you can get close to a 300% APY on top of the fact that PancakeSwap is up what, like 2,000% in the last few months.
Yeah,
It's
it's at
wild.
$1, and I think in January it's like $23 now.
Yeah, which is crazy. It's
It's wild. I mean, like, look, like the market is euphoric right now. Going into the Coinbase IPO today. I don't know. Like, we also have internal debates on the longevity of Binance Smart Chain in particular. People have bet against CZ for a long time. You know, and he continues to prove them wrong. So I think that Binance Smart Chain will be around, for some time. I know the Solana team are eager to be shipping more apps, building on top, more users, etc.
What do you
It's
think of Solana acceptance so far? It seems to me like all these airdrops are finally bringing people into the ecosystem, but I'm curious to your thoughts.
I think that there is a large amount of capital that is mercenary in nature that flows through crypto, and it will go where the highest yields are. And if a protocol is incentivizing people to participate in whatever app is on their protocol in this way, people will go there. And again, speaking to like the Matic experience today, once you kind of use Binance Smart Chain or Matic, and you realize what it could be like without gas fees and transactions getting confirmed much faster, it's kind of like, oh wow, like this is how it's supposed to be, and then people will stay. And if they think that Solana is sufficiently decentralized, I think that Ethereum power users will move over there as well. But ETH is still the big boy, still the incumbent, moving towards 1559. A lot of layer two optimism was supposed to launch this month. It's going to launch likely in August, I believe, maybe sooner. I'm not sure what they're saying. I don't know. I mean, it's anyone's guess.
And
Like, if you
1559 is what? That's
look,
next month?
like Casper Labs was raising in 2018 for another Ethereum killer, another layer one chain, right? And like, this was right after Hashgraph had just done a huge raise. I don't see a lot of traction on Hashgraph. I'm not sure what they're up to. There was just so many Ethereum killers at this time. Polkadot was, you could buy a Polkadot Saft for what's now would be the equivalent of 65 cents per dot OTC. Like Filecoin was going for 350, I think. Like, it was just, there was no conviction that any of these things would have value in 2 years. People were super bearish. And like, if you had told me that Casper Labs would launch at a $300 million valuation on CoinList, and then, probably it's trading, I think, on Coin Market Cap, like there's some kind of future at like $2 per, which I think puts it at multiple $1 billion valuations. Like, I would have said absolutely not. It's the valuations for a lot of these layer ones, is still pretty incredible relative to the traction.
Yeah, and does that concern you?
I mean, yes and no. I think that there's a lot of euphoria in crypto markets today. I think I mentioned that earlier. Like, the Coinbase IPO looking like either, a great, one, like, objectively outside of price movements, like a pivotal moment for the space. Incredible, like people wrote off Coinbase as well, right? After the first market downturn in 2014 after Gox, like
Oh, I remember. I mean, not even 2014, but in 2018, after they raised that that round at, I think it was about an $8 billion
$7 billion
valuation,
valuation. And
people were laughing.
I invested in that round, and I had buyer's remorse. I had buyer's remorse on that one immediately. I was like, I should have just bought Bitcoin. And I think that as of today, it will have outperformed a Bitcoin investment at that time,
But
but maybe
the thing
not.
to keep in mind is you may
But
have
you had,
sold the Bitcoin.
yeah, exactly. So you kind of like, this is another thing that I'm realizing is like the forced hold is incredible on venture investments. Like liquidity is a gift and a curse, right?
Right.
Because we're all subject to the emotions that the market creates for us, right? Fear and greed. And it's hard to, I think two of the hardest things in this space, one is sizing a position with enough conviction when others don't believe in it. And the other is then continuing to hold through the volatility when you've realized some pretty exceptional gains, right? Like selling Rune at a 10x, that's a great outcome in any industry to do that in a year's time, except in crypto because it's an 1000x, you know, uh, half a year later. And and there's a lot of that in this space. And then staying sane and being like, okay, there's going to be other at bats. I think I don't know. I mean, where valuations are today, I like a good gut check is to speak to someone that's raising capital not in the crypto space. Speak to someone that's working on a seed stage startup that has shipped a minimum viable product that has users and can barely get a $15 million valuation on a safe valuation cap on a safe. And then we see projects in the private market right now that are, pre-product raising at 40, 50, 100, $200 million fully diluted market caps.
I got pitched on a new governance token, which is not launched at about a $600 million market cap uh, for a
Yeah.
non-existent product.
And that's the thing, right? Like most investors in crypto are playing the RV game. So it's all about relative value, right? Like look at the exchange token run up over the
Mm-hmm.
last 2 months. It's all been about the relative value to Coinbase. And that logic makes sense, but that's that's why like it's hard to beat beta as a crypto manager. It's hard to beat Bitcoin
Right.
because these assets are reflexive on the way up and reflexive on the way down. And on the way down, everything seems correlated, right? There's just really not a lot of safety. So while that protocol that was raising at 600 million might point to a number of others that are live that could suggest it should trade at a $5 billion valuation right now. The question is like when everything turns in the other direction, you're basically, I guess, like what would be a good analogy? Like you're anchoring yourself to a sinking ship essentially, or
Right.
tethering yourself to a sinking ship. So I guess what I can say from like experience through these market cycles is take profits. Like FOMO is real. We all experience it. Try not to kind of look at all of the things that you missed because if you're listening to this, you've probably done really well for yourself in this space by any kind of relative metric to other industries. And valuations are kind of the good thing about these valuations. On the flip side, like going to a positive note, is every time we have these bull cycles, we get a wave of new talent entering the space. New talent from financial institutions, new talent on the engineering and tech side, which is so badly needed. Developer talent in this space is
I mean,
so
the applications we're seeing now are incredible. It's like
yeah,
people at places like BlackRock and Goldman are applying to work for me. I'm like, what?
yeah.
Uh,
It's
It's so
insane.
funny, and it's funny. I was talking to Hassan Basiri, who's a good friend, who's
Yeah, from
runs
Arca.
from Arca
We
exactly,
should have him
and
on this show.
we did. It was actually on the show. I'm actually going for dinner after we record with him.
I'll
He's a
tell him I say what's
good
up.
guy. I definitely will do. But anyways, we were joking on the podcast. We are like, neither of us could get a job today. Like, if we were applying into crypto today, there's no chance we would have gotten a job. Zero.
Yeah. Yeah, man, I feel that. And it's a great time to enter the space. On the flip side of that, in 2019, if you were looking for a job, crypto companies weren't hiring. So now it's like everyone's hiring, but there's just, there's a sea of applications, but still not enough developers. There's still not enough developers. Like we need more developers in crypto. And one of the hard things as well is like if you're a good dev, right? Like because of what's happening with DeFi, you can make so much money just kind of doing your own thing that it's hard to even motivate developers. So you need founders that are inspiring, that have a multi-year vision, that want to build something that's going to change the world or the future, um, and not just kind of like an iteration of an iteration of an iteration, because those things, those deals will disappear in a bear market. I think we see a lot of investors kind of accepting higher valuations because of early liquidity. So, if you invest into token and there's like a 35% unlock, and that unlock, might return 2 to 3x your principal, and then you have 65% that you let ride, you can continue to rinse and repeat that strategy. And I think there's a lot of investors that do. And so that keeps valuations elevated because investors don't really care about the valuation necessarily. But it's just that game has to end at some point, right?
Yeah, no, 100%, 100%. And so, in the middle of this game, right, where things are going up, the average exchange token is up 1,250% since the start of the year. The average,
Yeah.
and the average, smart contract platform is up, 400%, right? All of these different assets are up, right? You come from a more of a venture background, and I believe mechanism, and you in this you can also introduce mechanism in what you do, which would be great. But
Yeah.
how do you find those early stage venture bets, those opportunities? Because as a venture investor, right, you're trying to go 100x, right, and you could be wrong 80 out of 100 times, but if you're right that one time, that makes the entire portfolio. And so, curious as to how you even try to find that in this market.
Yeah. So just speaking to Mechanism Capital, it was founded by Andrew Kang and Daryl Lau, and after DeFi Summer. Benjamin Simon joined the team right after that, and I joined right after Ben. My role is head of platform. So I'm in a hybrid role. I source opportunities for investment and help research investment opportunities. But I also am kind of like an outsourced COO, CSO, sometimes a psychologist, for founders, right? And I think that building, being a founder of any startup, I've done two, is hard enough. It's extremely challenging. The odds are stacked against you. Most startups do fail. You have to convince a lot of people of your vision. You have to deliver time and time again. You're always capital raising. It's just extremely, extremely challenging. But then tack on public market scrutiny to private market problems of a startup founder, building a community, satiating that community, having a publicly listed token price. When your product, you're constantly shipping in production or
Plus,
iterating.
anons in crypto that are just going to rip you to shreds.
Yeah, like Twitter nons that are just like nothing you do can be right. So you do a fair launch with a capped TVL and everybody says, "Oh, it's a whales game because you capped the TVL and only a couple of whales got in." You uncap the TVL, then you get $1 billion worth of apes coming in who don't understand the protocol, and the thing works against them, and then they're screaming that it doesn't work and that you need to refund the dollars because you fucked up. And it's funny because there's so many scammers in the crypto space who are literally outright like producing just vaporware. And then there are founders who are trying to build in earnest who just fall on the wrong side of the community and just get absolutely skewered, which is one of the interesting phenomenon of this space, I think, as well. That's challenging. So like I love my job. I think working with founders, to help them, right? Like it's the little things. It's finding talent. It's like knowing who to turn to when you need a press release to go out. It's about figuring out the right marketing strategy. It's about working through, then it's some bigger things like working through liquidity targeting programs, because ultimately that's how you're building and rewarding your user base. Thinking about integrations with other DeFi protocols, all these things we do at Mechanism. And I think right now, because there's so much liquidity sloshing around, that every venture investor's cash is green. Deals are getting squeezed, allocations are getting squeezed every day on deals. Large funds are taking a full $10 million raise and pushing everyone else out. And the only way to differentiate yourself is to go to bat for your founders. And so that's kind of how I see my role. And I think that Mechanism and the rest of the guys there want to be as supportive to our founders as possible. And a lot of people pay lip service to that. But I think if you speak to the companies that we've invested in, they would agree that that's kind of like what we live by. And as far as kind of like what we look for, Mechanism started as a DeFi focused fund. I joined in September, and I've been really, really fascinated by the NFT landscape and the open metaverse, and what that means for the future. And have, as an angel investor, personally invested in a number of projects and started kind of speaking to the guys about that landscape. And, we've made a couple of investments there as well. So now we're doing more than just DeFi. We've invested in
So
infrastructure.
show the book. Yeah, let's hear what you're interested in on the NFT space. I'm allowing you to show the book right here.
Show the book. Well, I want to mention XDeFi, which we do infrastructure investing, and XDeFi is a MetaMask competitor, browser extension wallet, cross-chain compatible. You can trade Bitcoin, Binance Smart Chain assets, ERC20 assets, and Ethereum through the wallet. They have a private beta going. The public launch is coming soon. The team is just a bunch of savages. They're crypto native for a number of years. They know the game. They wanted to build something for people that have been, complaining about the UI of MetaMask for some time. And I think they've done an exceptional job. So I'm really excited for that project. So that's shilling the book. NFT plays, invested in Yield Guild games. Gabby Dyson is an incredible founder. I met him when I was at Wave in 2018 or 2019. I did a blockchain-based gaming research report with a couple of the guys on the Wave team. Really thought that was a use case for blockchain that actually made sense, kind of in-game items that you could own and port between different universes, let's call them, or different multiverses. And I've seen kind of the technology evolve from ERC 721 to ERC 1155, which allows you to make multiple NFTs versus just kind of one for each individual, which was kind of just challenging from a tech standpoint. And anyway, sorry, I'm just getting super excited about these projects. I'm like rambling right now. Gabby
No, go
Dyson,
for it. Go for
when
it.
we did the blockchain-based gaming report, Gabby had a game that he had launched, and I'm blanking on the name, but I actually consulted him on a lot of the trends that he was seeing. So he was almost like an advisor on that project, and really helped kind of open my eyes to this world. And then I kind of dropped the ball on it personally, and he and I didn't stay in touch as much, but he got really deep into the Axie ecosystem and into Axie Infinity at that time, and kind of continued to kind of play and breed Axies in game and earn, and was there when they launched AXS. And really cool story. Like when COVID hit, the Philippines went on lockdown, and there was like something like a 40% unemployment rate. I'm pretty
I
sure.
remember this when they were all earning AXS in game with Axie Infinity.
Yeah, so he started training people like, this is how you open a MetaMask, this is how you participate in Axie, and you breed rare Axies, and teaching them how to play, and they were earning money doing it. And then Uniswap airdrop came, and it was like life-changing dollars for some of these people. I mean, especially if they held it, it's like talking like 10,000 plus. I don't know what the equivalent would be today, maybe like 30, 40,000. I'm blanking at what the price was when it
It's
dropped.
somebody wrote yesterday it was one PS5, and I think now it's 22 PS5. So I don't know if that means the retail price of a PS5 or the black market price of a
Yeah,
PS5.
so
I
it's
think is what I
crazy. So
saw.
like these people in the Philippines getting an annual salary from a Uniswap airdrop, and maybe they had opened multiple MetaMask accounts, right? And Gabby did all of that. And I think what he realized was that playing games in virtual worlds is actually like, it can be a job, and you can earn money, a pretty good living doing it. And so created this guild of players to interact with and support new blockchain based games in terms of cash flowing NFTs in the metaverse, right? And there are people that own these NFTs that don't have the time to actually use them to maximize the cash flows from them, and YGG can do that, right? And we'll start to see kind of NFTs getting rented out to other players for them to build cash flow off of it, right? So almost like lease own relationships for land in the metaverse and other
I mean,
assets.
this
So
this sounds a little bit like, not exactly, but like the Brock Pierce origin into crypto story a little bit, with what he was doing
yeah,
beforehand.
absolutely. I mean, he was doing kind of the gold mining for World of Warcraft and basically selling it to users. So a lot of this stuff is like history just repeating itself. I think I think like what's really interesting to me is kind of this convergence technology. So I believe that we will have ubiquitous AR in our lifetime. So that the hardware for augmented reality will catch up eventually, and we're going to see digital fashion and digital items and the revenue generated from them exceed the revenue generated from like regular retail fashion. And the reason I believe that
That's
is
a big
because
take. That's a big take.
yeah, that's a big take. That's my hot take on this one.
That's a
I
big
think
take. You like glanced over that. That's a really hot take. So
That's a hot take. I mean, I think, I invested in a company called Aglet, which just started launching NFTs. They're basically Pokemon Go for sneakerheads. You know, imagine basically you're walking around wearing your Moji contact lenses, which are AR contact lenses. I think that's the name of the company that's building those. And everybody is just rocking a one of one NFT that was designed by their favorite creator. And it's over, a hemp shirt and recycled Adidas shoes from recycled ocean plastic. And people no longer care about what you're wearing in the real world because they can see this digital overlay on top. And there's this infinite creative space around it and expression that we can have. And I think that, I think that money flows where attention goes. And so we're already spending so much time in front of screens in our own digital worlds, whether it be on Telegram, which I'm sure many listening to this are familiar with, or other kind of metaverses like Decentraland or Fortnite. I think there's just going to be a ton of money spent on these in-game, or
yeah, I mean,
not even in-game, just virtual items.
I was very dismissive. I still remember NFT NYC, another thing, that I missed out on, and, being told I have to go, and, being like, what the hell? Like, who's going to buy a virtual this or a virtual that? And, we're starting to, we're not there yet, but we're starting to see it. I mean, if you look at fan tokens on Chili's, right, there's certainly a lot of people that are interested in participating that are not necessarily crypto native folks. I mean, obviously the NBA Top Shot mania or euphoria,
Hmm.
crypto punks, and there's so much going on, and a lot of it is still speculative, but I'm definitely starting to hear and to see lots of people get interested. A little bit of a shilling our book, not an investment, but we write a quarterly report with eToro every quarter, and we're actually coming out with like a 20-page research piece on NFTs. And people on our team share a very similar point of view, maybe not as elaborate as yours, but similar. And so, the next question is, where do you think the value accrues? Right, there's obviously the protocol versus application argument on whether or not Ethereum should be valuable, the things that are built on top. But let's talk NFTs. Is it Rarible that should accrue value? Is it Flow that should accrue value? Or is it the things that are being built on top that should accrue value?
Yeah, this is a great question and one to which I obviously don't know the answer, but I can provide some guesses. I think talking about missing things. I was speaking to Super Rare, Rarible. Um, I didn't look at OpenSea because they weren't raising at the time.
By the way,
Um,
I was at Gemini's office right after they bought Nifty Gateway, and I was like, why the hell did you do this?
Yeah, and
Uh,
I mean, look at how successful that's been so far. Now we're experiencing a local top in NFTs, right? Anybody who's tracking the data, Top Shots is going through a little bit of a bear market. The number of buyers and the dollar value going into NFTs is declining off of the peak. I think you could point to like the Beeple auction as kind of peak NFT in terms of this particular mini cycle, and that's okay, right? These things are going to go through boom and bust cycles, but these platforms have done exceptionally well, and I had the opportunity to invest in a bunch of them uh, in Q3 of last year, and I passed, and I passed because I just saw businesses with zero economic profit, you know, they're going to compete each other to really, really slim margins. And like, I just don't understand the benefit of one platform over the other. And there's just massive competition that's entered the space. So I'm not sure that the exchanges will be where the value is captured. Although I've been kind of waffling on that lately, obviously, because they're all raising at much higher valuations. And I'm like, I really should have just invested in these. Like, clearly I missed it. Classic crypto stuff. But like, if you look at ERC20, if you look at basically like fungible tokens, who have created the most value in that market, it's all the exchanges, right? So perhaps it'll be the same with NFTs. I think what's most exciting about NFTs is like is the ability for the creator to continue to capture value over time. It's like you get like a SaaS revenue model in the future, for an initial creation, because you continue to profit from, it's not really SaaS because it's not as consistent, but you continue to profit from secondary transactions of your NFT. And then you can start to see creators doing things like that force secondary transactions of their NFTs. Like Blau just launched this melting faces campaign, and he just continues to kind of push the bar forward on this stuff. This melting faces campaign where he launched these open editions on Nifty Gateway called Faces. And then he was basically like, if you burn a certain number of faces, then you immediately receive a new one of one NFT. And if you burn one, then you're in a lottery for another rare one of one NFT from Blau. And now all of a sudden there's like a lot of secondary market volume because, oh, maybe faces should be worth more because they're scarce. Or maybe I want to buy four more so I can burn it and earn this other thing. Or maybe I want to burn one. So like now the value of faces goes up, plus like all the resale value generates more income to the creator. So I'm just thinking about like all these new games that you can create, for artists, and other creators, like fashion designers who are going to do some digital fashion stuff. And I think there's just an interesting universe where creators might be able to capture a lot more value. If you look at the music industry, you look at another person that's been forward thinking on NFTs, RAC, Dre, and like he's posted before, like what you can make from streaming on Spotify as like a
Four
middle tier
cents.
artist, right? Like you just don't make money, and then touring has stopped. And what an incredible gift NFTs have been to these musicians to come on and be able to go direct to their super fans who want to own these assets. I think Tycho is doing a drop tomorrow, which I'm really excited about. It looks beautiful. And you know, capture the value created by their output in a way that was not available to them before, when live touring and 360 revenue has declined so much. And that's one thing that I gained from being in the music industry. Like, one of the attractive things, one of the kind of like ideas that attracted me to crypto beyond Bitcoin in 2017 was all the platforms that were trying to build, platforms for, tickets, event tickets on the blockchain. And there's this major problem in the ticketing industry where, it's essentially they get botted, right? So it's almost like these IDOs or these
Right,
coin.
and the musician doesn't benefit. It's the the reseller that
It's
does.
the reseller that does, right? It's the scalper that comes in and bots. And it's Ticketmaster, frankly, because they have a secondary market for tickets and they get a percentage revenue on that, which is in some instances higher than the primary sale revenue share that they have. So, I always found interesting, like if you could track the resale of tickets and actually programmatically deliver value back to the creator from those resales, I think that would be very interesting. And so, like the music industry showed me some of these things that are broken, and 360 revenue has become a huge part of producers' revenue streams, which 360 revenue describes everything outside of just selling their music digitally, because like nobody's buying CDs anymore. So touring revenue, merch, things like that, and creating these communities of super fans and selling them product in digital merchandise, which a lot of this NFT stuff is, whether it be audio or video or still images, is just a new way for creators to monetize. And I think that's super cool. So long as they're long-term oriented and they're not trying to like fleece their fans to get a quick buck, which, we're seeing a lot of agencies come into the game now. I think each of them have their own NFT division: CAA, UTA, WME. And we know there'll be a lot of rent seeking. We know that, look, we've been in this space long enough to know that when there's a gold rush, you get all sorts of characters coming into the game.
Oh yeah.
But NFTs, like, did you imagine that the term NFT would go mainstream?
No, never in a
Like,
million years. Never in a million years. I thought it was stupid, and I thought it was fringe within crypto.
yeah, exactly. It's like this fringe concept, and now all of a sudden, I think because of the kind of like rocket fuel or the
Well,
oil on the fire of
it reminds me
Clubhouse.
of the, everybody's getting rich and you're not, right? The
Yeah,
cover of the
yeah, that
magazine
image.
with the Bitcoin,
By the
it's
way,
just,
great reference because today somebody actually sold that as an NFT, and
oh,
I think
really?
they
That's funny.
donated the proceeds to Gitcoin grants.
Yeah, no, I mean, I didn't, foresee it. Look, I'm still confused by some of it. I mean, I still haven't wrapped my head around, like, could you mint one NFT on Ethereum and then mint the same NFT on Near and then the same NFT elsewhere? And are they still one of ones? Like, what is the idea of like cross chain NFTs and what is valuable, what's not? How do you even value these things? But I guess in some ways it's kind of similar to artwork, right? I mean, how do you value artwork? It's whatever somebody's willing to pay for it.
Yeah, absolutely. And we recently invested in a protocol called Upshot, which is trying to create more efficient price discovery for these illiquid assets, which can enable a lot of different things, like, for example, borrow and lending against the NFTs, which I think is going to be a huge market space already in the art world, right? Like lending out your work of art to a museum is quite lucrative. Borrowing cash against the art that you keep in your home is something that you can do, and so I think digital art will follow that.
Yeah,
Will
I think
follow
the
that trend.
challenge is, as they know, and I'm sure is just going to be how the hell do you value this and how much are you willing to give a loan for if you're taking the artist collateral.
Yeah, absolutely. I mean, I think that's what Upshot is trying to solve in terms of like it's a question and answer protocol that is basically trying to pull a bunch of users who have skin in the game, essentially as like a prediction market, to determine whether or not an NFT is fairly priced as a first use case. And the idea is to answer a bunch of subjective questions where you're incentivizing the users of the protocol to answer in the most honest way, but also in the most correct way. So, I think we'll see a lot more experimentation with these sort of things in the NFT world to make pricing a little bit more transparent. Fractional, another protocol that is, fractionalizing NFTs. I think Niftex is another one. When you have the ability to trade pieces of these things, then there's more of a market for the fungible asset, and I think you can get a better sense of what the market values. I'm an NFTX bag holder. I think that's super compelling. Also, like, outside of the open metaverse thesis, right? Like, LP positions are going to be NFTs, insurance contracts are going to be NFTs, mortgages will be NFTs. So there's a lot of use cases for them within the DeFi ecosystem as well.
And what do you think, of this concept of wash trading in NFTs, right? The idea that, if you want to not recognize capital gains, right, you can, buy something and sell it to yourself for super cheap, right? Or you can do all these weird things, or you can mint an NFT, sell it to yourself for a lot of money, and then, make it look like it's on a discount and, then resell it for, 20, 80% less, right? And, all these kinds of ways that people are trying to game, either, pricing on NFTs or game paying their taxes. I mean, I'm curious to your thoughts, or potentially even launder money. I mean, I'm not suggesting that this is being done at scale, but it's something that's been discussed.
Yeah, I mean, I think money laundering is an issue in the traditional art world as well, right? And I think if you you watch Tenet, that movie, and all of these kind of offshore art storage houses, I forget what they were called. They exist. It's a fascinating thing just to keep out of the reach of tax collectors. These types of games exist. I think it came out. I guess what's the artist name? Damien Hirst, the guy that did the skull, the bejeweled skull.
Mm-hmm.
It came out that is that his name? Blank. Oh yeah. Okay. For the Love of God is a sculpture by Damien Hirst. It, you know, I think that was purchased for $100 million. I'm blanking on it. Let's see. What was the sale price? Asking price of 50 million. Sale. £50 million, which at the time I think was like one of, just a windfall for the auctioneer. It turns out that he was part of the collective to purchase it. And it was a bunch of insiders pumping the value of the rest of his art, right? So these games are played in the real world. They'll be played in crypto. I think, I mean, I don't know the team at Metaverse, Metacoven. They seem like great people, but like you create B20 and then you go participate in the Beeple auction and bid that thing up to 65 million when you're holding a lot of other Beeple assets, right? Like show me the incentive and I'll show you the outcome, I think is the
Right.
Charlie Munger saying. So there's a lot of games that are being played in NFTs, in broader crypto, in other financial markets, in other non-financial markets. I think people will always try to do those sorts of things.
Yeah, I mean, I could go on and ask you questions for hours and hours, and so I want to be respectful of your time, so I'll ask just a couple more.
Okay,
Um,
cool.
the first is, what are your thoughts on the Coinbase IPO today, both in terms of the outcome, right? With I think it ending the day at about $330-ish. The outcome there. What happened before the IPO, and what you think the long term ramifications are going to be.
Yeah. So
Or the direct listing, I should say, because I'm sure somebody
yeah,
in
it
the
wasn't.
comments
It wasn't. It was not an
somebody's gonna
IPO.
correct me. The direct listing of Coinbase.
I mean, I think it pumped above the reference price, right? So reference price was 250, and it landed where 330.
Around there.
Yeah, I mean, I think that I would, if I had to say where it landed price wise on day one in the realm of expectations, it would probably be right around below average, just below
I'm
average as
I'm in
far
the
as
same
crypto
I'm in the same
expectations.
boat.
I think people would have liked to have seen it land above 100 billion. One thing I was told that's kind of interesting is I think that the Coinbase employees have like 3 days to sell, and then they have to file to sell after that.
Uh-huh.
So I think that institutions know this is like a quirk of direct listings and are going to wait until that period is over to make their purchases. I think as far as like what is it on a NTM revenue multiple at 100 billion? It's something like 25x.
I think that sounds right.
Yeah, so I mean, it's right in line with other kind of recent offerings on the public markets. So one, I think it's again, I said this earlier. I think it's an incredible thing for the space. I think it's the day that the institutional crypto narrative is solidified. We've been talking for years about the institutions are coming, the institutions are coming. And this last 12 months has been just that. They're here, and it's still early. I mean, that's what's so crazy. I was talking to the manager of a large family office in Los Angeles today, who was, just exploring the space. Like his his client and his client's friends who are multi-billionaires have zero capital deployed to crypto still. Like it's still so early, but like this I think will mark as a watershed moment in the adoption curve of crypto. I think the crypto market has gotten very euphoric over this first quarter. A lot of people have made a lot of money, often without much effort. As long as the money printer is on, we might continue. It's hard to say, right? Like all risk assets continue to be bid, but I do think there was leverage flowing in that was ahead of this Coinbase IPO, doing pair trades with other exchange tokens, and um, I, I haven't looked at exchange tokens, but I think they might have dropped based on this outcome.
They did. I was sad. I was sad.
Yeah, I would expect that. I mean, I think it was below, like, people were talking 150 billion, 165 billion.
I heard
Um,
at one point on one private market, not like FTX, but an actual, accredited investor private market, people were paying 130 billion for shares a few weeks ago.
yeah, so I don't know. We'll see. I mean, it's kind of like a classic sell the news type thing in the crypto space. It felt like.
I,
Um,
I, I had a feeling it was going to be the case. I've been saying that for a few days, and I didn't sell the news.
yeah, I mean, we'll see what happens. It's the Wild West out here, man. Nobody knows, but it's exciting. I'm really happy for all the Coinbase investors. I mean, I know some people that were in that seed round. I'm really happy for the employees who busted their ass through cycles. You know, a year and a half ago, it was not cool to be in crypto. 2
I
years ago,
remember
let's
we
call it.
we we changed words on our website from crypto to digital assets at one point. We
Oh
started to
man,
make that change.
capitulation. It's
Yep.
all
We
good. I
didn't
mean,
fully do it. We didn't fully do it. We're still here.
yeah, I mean, it was, yeah, I'm still here as well. But, when I left Wave in 2019, there wasn't a lot of opportunity out there, right? I had to fly solo for that time. And I think that it's exciting for the space that there's just so much opportunity for investors, for financial analysts, for credit risk analysts, for engineers, for business development and marketing people. Like, please, if you're a marketing person listening to this, interested in the crypto space, all of our projects need good marketing talent. Oftentimes, I find the founders that are the most technical, they underweight the importance of marketing. There's a lot of vaporware projects out there that do great job marketing. Like, who's to say that those marketing tactics are below a project that's actually technically sound and is building something cool? Don't you want to get your product, your token, if you're legitimately building for the next 5 to 10 years, into the hands of as many retail users as possible? Of course you do, right? So, like, don't underweight the power of marketing. Yeah. Anyways, I'm kind of like just super excited about the space. Whatever happens to prices this week after Coinbase doesn't really matter. I think bear markets are cool too, because there's a lot of shit that gets washed out. And yeah, I think we're all just having fun.
And so, the question that we ask all of our guests, and, we've hit on this at points, is just, fundamentals, right? It's the fundamental value podcast ever, after all. So, how do you define fundamentals for digital assets?
So I think, that's why I think people love DeFi, right? Because you can look at user count, you can look at transaction volume on exchanges, you can look at assets deposited, fees earned, and you can start to actually model out cash flows for token holders, assuming that the token holders have rights and the ability to change governance to make sure that, they can collect fees. And I think that beyond that, right, like, I would say the strength of your community, um, in terms of the active participation of community members in your channels, your social media channels, is super super important. Whether you're pre-product or post-product, having a rabid community that has a religiosity to it is a recipe for success in crypto. And crypto runs on memes. I mean, for better or worse, the world runs on memes. The world runs on narrative. And if you have a community that's bought into your narrative, like Bitcoin, the biggest meme coin of them all, with holders that are absolutely religious in nature, myself included, um, I think that you'll find success in crypto. So that's a fundamental indicator that's important to look out for.
And so, my last and final and fun question is what is the shittiest shitcoin that you have ever purchased?
Oh man, there's too many. I should have prepared for this one.
Just throw out names. Just list them out.
Well, let's see. So I invested in a company called BlockX in late 2017 that positioned itself as the Coinbase of Europe. I don't think they ever launched. It was the Coinbase of Europe when Coinbase was the Coinbase of Europe. And yeah, that was just
This was a
absolute.
token.
It was a token deal. Yeah, it was a token deal. It was like really early on in my crypto days. I was super excited about it. I'm also like hesitant to name projects that I've invested in that were absolute shit, but still have large communities and market caps. So I'm not trying to get like burned on Twitter by a bunch of anon
Oh man.
frauds.
Oh
But
man.
yeah, BlockX was one of them. I mean, it's funny. I'll give you one quick story about something that I thought was a shitcoin after the fact, but turned out to be not. So I invested in a project called EcoMi in late 2018. Um,
That's come back from the dead.
yeah, it came back from the dead. And so like I went through like the emotional cycle of like, all right, this is really cool, a wallet for NFTs. They have a bunch of great licenses. They had like DC and Warner and some others. And I was like, this is awesome. But like there was also this token economic element to it, which was it was going to list at 1 Satoshi per OMI token and like only with a BTC pair. So could it ever drop below 1 Satoshi? which I think was kind of a funny, ridiculous crypto experiment, like investing in an asset that could never go down in price. But like, of course, it listed and it was paired against USDT and against Ethereum, and you can go smaller units there. So it did very much go down in price, like 90%. And, and has since come back from the dead
That's
and
like
is
the
like,
most crypto thing I've ever heard. Like, let's build something that can't go down in price.
yeah, it was so crypto, dude. It was like, it was hilarious. Oh my God. Like the shit that I bought into at that time is funny. But I mean, because there was some real product behind it, real traction, they're still building and NFTs have taken off. And so it's done really, really well, which is great. But man, biggest miss was I met SBF. You didn't ask this, but I have to share because I love sharing it with
Yeah,
anybody that'll
yeah, yeah,
listen.
yeah.
I met
We can do
SBF
we
in
can do a
Hong
whole
Kong.
nother episode on misses. We both of us can go through all the things that we've missed.
Yeah, absolutely. FTX. I met SBF at Token 2049 in Hong Kong right after Jihan from Kinetic. I had a great meeting. I left thinking this guy's going to make a shitload of money. He's going to change the game. And I dropped the ball. I just passed it on to other people at the fund, started waffling. I mean, that's why you have to have conviction in this space because people don't remember or might not remember, but like at the time that FTX launched, there was so much FUD. It was like, why would you want to invest in an exchange where the market maker is building the exchange?
I
Alameda's
remember I
bankrupt.
was listening to, I think it was Venture Coinist. I think it was Luke Martin. I think it may have been SBF's like first podcast or one of his first podcasts when he was describing FTX, and I was so dismissive too.
Yeah, people were dismissive, right? But I just met this guy. I was like, what a charismatic guy who gets it. He's so smart, so galaxy brain. And anyways, the fund ended up passing, and then I wanted to do a personal investment, but the seed A had closed, so the price was double, and I was like, I'm not paying double the price. It was 20 cents.
This is on FTT at 20 cents.
Yeah, FTT at 20
And
cents.
it's over $20 now, if I'm not mistaken.
Oh yeah.
Well, we'll get him next
Deep,
time. We'll get him
deep
next time. And
sky.
I hope that the
Ah,
next episode we record is on how all of these NFT bets and metaverse bets are playing off for you guys, playing well for you guys. But I really appreciate this. I had a great time. I could ask you questions for hours, but thank you so much for joining.
man, thanks for having me, Josh. I appreciate it. It was a lot of fun, and maybe your listeners will get a kick out of it. We'll see.